Mr. Jairaj. Before we look into the results of the October-December 2017 quarter of our company, I would like to brief you about the overall domestic automotive market development in the last quarter, looking at production volumes except the two-wheelers. During the quarter ended December 2017, the Indian automotive market grew by 14% against the quarter ended December 2016. The highlight of the quarter was the commercial vehicle segment, which grew by approximately 21%. Heavy commercial vehicles increased due to the demand of high tonnage vehicles, ramp up of new range of BS4 vehicles, and infrastructure development led by government funding. Light commercial vehicles grew due to the festive season and demand from e-commerce companies, mainly for logistics. The tractor segment increased by 9.3% due to a healthy monsoon. Passenger car segment increased by 5.1%, driven by festive season, recent new model launches, as also easy availability of finance. Three-wheeler segment grew by 57%, backed by exports compared to the previous quarter. We now look at how the company has performed in October to December quarter 2017. With the introduction of GST or Goods and Service Tax, revenue from operation needs to be reported net of GST from July 2017. Accordingly, all percentage of revenue have been adjusted for excise duty for the previous year quarter to make it comparable. On a comparable year basis, revenue from operations have increased by 14.1%. In absolute terms, the revenue from operations for the period October to December 2017 stands at ₹3,072 crores as against 2,693 crores over the same period 2016. The Mobility Solutions segment grew by 17.8%. Business beyond Mobility Solutions witnessed a marginal decline of 3.1%. The domestic sales for this quarter grew by 13.1%, thereof Mobility Solutions by 19.7%, outperforming the domestic automotive market, whereas the business beyond Mobility Solutions declined by 15.9%. Export sales show a double-digit growth of 22%, mainly for business beyond Mobility Solutions segment. In Mobility Solutions, diesel systems and gasoline had an impressive double-digit growth aided by volume ramp-up by our customers and product mix change consequent to the introduction of BS4 emission norms effective from 01/04/2017. Aftermarket witnessed a growth of 4% after recovering from GST transition issues and low availability of working capital with channel partners, offset by reduction in the car multimedia business. The business beyond Mobility Solutions declined compared to the previous quarter. Though security, packaging, power tools and thermotechnology divisions grew at double digit, it was offset by a decline in this quarter in solar energy division. For 9 months period ending December 2017, revenue from operations increased by 8.4%. The Mobility Solutions grew by 11.8% with all divisions except aftermarket, which having a positive growth, whereas the business beyond Mobility Solutions decreased by 3.3%. Material cost as a percentage of revenue from operations has reduced from 54.3% in October-December quarter of 2016 to 52.8% in current quarter of 2017. This is mainly due to continuing localization, favorable forex, as well as lower provisioning and devaluation of aged inventory in the current quarter. For the 9 months period ended December 2017, it witnessed an increase from 51.9% to 54.1%, mainly due to introduction of BS4 with effect from 1st April 2017, resulting in change in product mix with higher traded goods content. The employee cost has decreased to rupees 341.2 crores in quarter ended December 2017 from 387.5 crores in corresponding quarter of 2016. The decline is due to lower personnel cost resulting from productivity improvements and benefits from restructuring undertaken during the previous year. For the 9 months period ended December 2017, the employee cost stood at 1,026.8 crores as compared to 1,060.2 crores for the same period in 2016, showing a decline of 3.2%, mainly due to reasons as already explained. Depreciation has declined by 3.9% in quarter ended December 2017 as compared to the quarter ended December 2016 due to lower additions in R&D assets, which attracts higher depreciation rate. However, for 9 months period ended December 2017, there has been an increase of 12.2% in line with investments on new generation products. Other expenses for the quarter October-December 2017 is 660.3 crores as against 556.8 crores in the same quarter of 2016, an increase of 18.6%, mainly driven by one-time maintenance costs, royalty charges due to product mix change, and increase in professional charges for BS6 products. For the 9 months period ended December 2019, other expenses have increased by only 1.7%. Operating profit stood at 323.3 crores as compared to 158.1 crores of October-December 2016, mainly contributed by higher service income, improvement in material and personal costs, as explained earlier. For 9 months period ending December 2017, operating profit has increased by 11.1%, again driven by productivity and cost reduction measures. The other income has decreased from 142.6 crores in the quarter ended December 2016 to 102.3 crores in the quarter of 2017, thus showing a decline of 28.23% on account of reduction in MTM gain on marketable securities. For the 9 months period ended December 2017, other income has decreased by 26.1% from rupees 488.3 crores to 360.8 crores for April-December 2017. Again, this reduction is mainly due to lower MTM gain on marketable securities. PBT and PAT. For the quarter ended December 2017, the company posted a PBT or profit before tax of rupees 422.9 crores as compared to 299 crores in the same quarter of 2016, an increase of 41.4%. As a percentage of revenue from operations, PBT stood at 13.8% in the current quarter of 2017 as compared to 11.1% in the corresponding quarter of 2016. Consequently, profit after tax or PAT increased by 30.9% for the quarter of 2017 as against the quarter ended December 2016. For the 9 months period ended December 2017, profit before tax has decreased by 1.5% and stood at 16.5% of revenue from operations against 18.2% during previous year. Profit after tax has also reduced by 7.5%. Picking up from the last press conference where we have stressed our commitment to the government's electrification vision, we are happy to announce that we have set up an agile project house within Bosch Ltd on electrification. This project house will enable us to respond better to local requirements while making use of global solutions. The project house is working on prototype development and system integration to get electrified mobility solutions, which are both affordable as well as efficient. At the Bosch Technological Exposition or BTE 2018, Bosch will showcase its plan to increase the extent of localization of its electrified portfolio in India. And finally, the outlook. Growth of 2017-18 was reinforced by interest rates drop, good monsoon, improving market sentiment after the waning after effects of the GST or goods and services tax, amongst the other macroeconomic factors. Our forecast for the year 2018-2019 is optimistic with an anticipation of further improvement on macroeconomic factors. We are hopeful about the growth prospects, but we will have to do a very regular and clear health check from time to time in order to take stock of the situation and, of course, we will implement all necessary course corrections while the year goes around. Thank you for your attention, and I look forward to your questions. I have with me, as already explained, my two colleagues, Mr. Jan Oliver Roll, who is in the board of Bosch Limited as also the Chief Technical Officer, and Mr. Karthik, who is the Joint CFO for Bosch Limited.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, good afternoon, and thank you so much for the opportunity. If you can just help us understand a bit more on what really happened on the raw material side, even on sequential basis, the jump was quite impressive. If you can give more color there.
Yeah, thank you, Puneet, for the question. As I explained to you, that while raw material in the quarter has decreased, and it has been quite a bit of a decrease, as you rightly said, that we have to look also at the 9 months. So we have reduced from 54.3% to 52.8%, but we also have to look that in the 9 months period, it is increased from 51.9 to 54.1. So first point is that.
Okay.
Now, having said that, I would say we have had some impacts in relation to this on our continued localization, and this quarter a little bit on favorable forex as well as on low provisioning. But the most important part I would like to say is we are going into new generation products, and Bosch has a way of doing localization. So for the transition period, when we go for new generation products, we will have a higher traded content, and we expect the raw material content to be hovering not at 52 but around 54-55%.
Okay, so will it be fair to say that this was slight aberration because of currency and then it will normalize to 54% level?
I won't say aberration. I will just say that this 54-55% by and large will be there, with some quarters a little ups and downs based on quarterly impact, including looking at one time or the base. So yes, it would be fair to say in that 54-55 region, it is likely to be there for the foreseeable future.
Okay, great. So that's helpful. Thank you so much. And on the electric vehicle side, would all the technological developments take place within the listed entity, or will it be outside the listed entity as well?
We have given you this information through the press conference last year in September, where Mr. Peter Tiroler, our Board of Management, my colleague Jan Roll, and me conducted. So I will repeat what I mentioned there.
Yeah, thank you.
First is that Bosch Limited, the only public listed company in the Bosch Group worldwide, will have the responsibility for electrification as a front-facing with the customer in terms of providing solutions.
Okay.
However, we will work with our parent, including all our 13 legal entities and some more or less, on doing a back-end, very collaborative, very deep work. And as I mentioned today, for which we are going to announce through a press conference afterwards on the details, we have set up an agile project house on electrification within Bosch Limited. To summarize, yes, Bosch Limited will be the front face. However, we will work very collaborative both with our parents as well as our various legal entities and divisions within India to give a seamless experience to the customers.
Okay. Lastly, on your business growth on the mobility side, you grew by 17%, while your largest division, the diesel business, grew by 30% plus. Is there some color on what really happened in the rest of the businesses?
So I already mentioned to you that diesel and gasoline had over proportionate growth.
Yeah.
In aftermarket, we did have a growth, but it's relatively lower as a percentage. I mentioned that it was 4%.
Yeah. So what's really happening there? Why is it slowing?
No, I think it's not slowing. We have a growth. We are looking very carefully because we don't want to just dump goods.
Okay.
The GST had a major impact across the market, and secondly, there's been a squeeze on the working capital after the GST, and third, we do what we call a pull sales rather than a push sales. So we are going to do the growth there, and you will see numbers coming out in the future also as we speak, improving over time further. But we have made the base and the ground rules pretty clear in how we want to work with our extended arm.
Okay, so it's largely GST related some issues which could be temporary.
Capital, GST, various other issues in the market. So we are making the base strong and healthy for everyone, and that of course has implications, especially when you have external interventions like GST.
Yeah, great. That's very helpful. Thank you so much.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is on the line of Pulkit Singhal from Motilal Oswal Asset Management. Please go ahead.
Yeah, hi. Thanks for taking my question. Firstly, on the raw material side, what percentage of raw materials is imported currently?
It's about 60-40, so 40 is about imported.
40% of raw materials cost. Hello?
Yeah.
Yeah, okay, thank you. The other, small question. We always see this high degree of other expense in the third quarter, particularly. I've not really understood why does it particularly happen in third quarter. Can you help us understand?
Pulkit, first I have to just clarify, we don't purposely put a third quarter higher figure, or a lower figure. It just happens whatever the numbers come. Yeah. So first, I have to say that we have a very robust budgetary control system, and we put it in place across all our divisions, and starting with the beginning of the year, and we watch the year as it goes by. And you all know that there is something called good spends and not so good spends. So we allow the good spends to happen, but we allow them at a later part and not front-ended, because then we have a better cost control, as well as we can, tie it with the volumes when there's a fluctuating market situation. So we have this, plus we have a few one-time items also, like we've had some increases on higher royalty on our new generation products, because those are timing phased. This is not to do with quarter. We had this quarter a little bit on higher professional charges for specific consultancy, things that we did for various issues here. So basically, it's a combination of one-time come budget control, which we also let, I won't say let go, but give a little bit of relaxation for proper spends. So it's nothing to do with a defined quarter.
Okay, this last question on electric vehicle side, two parts to it. Because if my understanding is correct, your current product portfolio does not have much of dealing with your other legal entities in India. The businesses are very clearly demarcated. So to that extent, electric vehicle scenario seems to be the one area where you would be working more collaboratively. So how would the pricing of the product be done in that era? And also, if you could give us a sense of the products that could be introduced. Where could we see them?
Yeah. So, Pulkit, I'd like to have a slight difference of viewpoint, please, and please allow me to do that. You mentioned that other than the proposed electrification way, we do not have a collaboration. If that is not the case, Bosch has many legal entities The parent is the public listed company Bosch Ltd. But all of us work for all projects in a very, very collaborative way for us to give a seamless experience to the customer. So any of our projects that we currently work, be it brakes, be it electric drives, be it those which are residing in the Bosch Limited premises of gasoline and diesel, we work in a collaborative way, and the cross-functional teams constantly working, located at different locations, for the purpose of giving the customer a Bosch seamless experience. So that's the first point. Second point, the project house electrification, which later we will do a press conference and go into details, is about collaboration, and it's about looking at our portfolio of what our parent has, looking at the needs of the Indian market, at the two-wheeler, three-wheeler and four-wheeler, and we are doing tomorrow announcement. Those of you who are coming for this in Delhi, you will get to hear it. And then, of course, in the Bosch Techno Auto Expo, we are showcasing these areas of two-wheeler, three-wheeler, including a Bosch demo car. So we will show those, and people will get a touch and feel of the portfolio. So right now, I can't go into the details of the announcements, but yes, we will show in a granular way, but also the red thread on the way we want to take this forward.
Got it. Thank you.
Thank you. The next question is on the line of Sonal Gupta from UBS Securities. Please go ahead.
Yeah, thanks for taking my question. Good afternoon, sir. Just to clarify, so the higher royalty on new generation products is a one-off? I mean,
yeah, look, we transitioned from BS3 to BS4.
Right.
And when you transition and when you go for specific new generation projects and products, then you have to pay a royalty. So this can be linked to projects and products, this can be linked to a timing, and this can be linked to volumes. As all of you know, we are very transparent on the royalty that we pay to our parent, and Bosch Limited has an extremely competitive royalty payout, and you can see that in the numbers because it's in the public domain. And we believe in this transparency, and we believe that it has to be a win for all stakeholders.
Right. So, I mean, no, just wanted to clarify, is there some lump sum amount, or is this just, I mean, I would imagine that the royalty is coming in numbers every quarter, so that should not really be one-off, right, in that sense?
No, you do have royalty payments which are kicking in and things like that. So, while it need not be a one-off, there is a certain percentage to be paid for different types of products, including new generation products. So when you have a launch, it kicks in. So this is mainly led with the transition from BS3 to BS4, and over a period of time, you won't see that. In summary, the most important thing is what is the royalty value we pay a year, and what does it translate as a percentage. And there I'm telling Bosch is extremely transparent, and also it's an optimal number, and it's in a number which is gives very high level of comfort also to our minority shareholders.
Okay, right. No, I just want to understand if there's a lump sum amount here, or this is just a, I mean, normal course of business sort of a thing.
You will have these things once in a while in different quarters. Yeah, you can't take this out.
Oh, okay, okay. And so just on the other point, like you mentioned that we would in due course be doing localization. So just, I mean, currently as the transition has happened just now, BS3 to BS4, the content, import content is probably, and the traded content is higher. So just to, I mean, could you just talk about, I mean, how do you see this moving? I mean, by when, I mean, given that the industry growth, especially on the commercial vehicle side, has been quite good, how do we see the localization program, and by when do you think that you will be able to localize what you would be targeting?
Yeah, I've mentioned this before, so I'll just give a recap of what I've told before. Bosch has a well-oiled localization program based on the customer demand and what a line can produce. So, these capex are pretty expensive, and we want these lines to be utilized to a minimum of X percentage of the total capacity. So we get in the lines and we order the lines and we plan for the lines based on the customer demand. It doesn't make sense when the starting volumes for us to put in the entire capex. So we've done this for our common rail projects earlier. I remember when the first Scorpio came in India, at that time there was very little, localization, 1998, 1999, and then things moved up. So, short point, this localization program will be followed. In extreme cases where the volumes are low and where we have capacities and where it makes financial and otherwise sense, we will import it. But generally, we follow a robust, clear localization plan based on customer demand and a clear planning, including supply development.
All right. And just in terms of the last question from my side, just in terms of the recent budget increases in import duty on certain components, etc. So will that be passed through from your standpoint to the OEM, or would you have to absorb some part of that?
Not really. When you get such things, you look at the whole system that we sell. So we are always in with our customer relationships. Bosch sells a holistic system, and we take them from the conception right up to SOP. Example, what we are doing for our acquisitions for BS6. So we don't go into the individual zones unless it's a major impact across, or unless where there's a sort of effect, a domino effect like the GST, things like that. So it's looked at, efficiencies are looked at, and customer system prices are looked at, including relationship, and then we take a call. So there's no individual call on such item-wise situation.
Okay, great. Thank you so much.
Thank you. The next question is on the line of Vasudev Banerjee from Ambit Capital. Please go ahead.
Yeah, congrats sir for a good set of numbers. One thing, like in your press release where you have mentioned that sales of diesel systems division registered a growth of 34%, much ahead of the automotive market growth with the aid of new gen products and change in emission norm. So it will be very helpful if you can let us know out of this 34%, how much will be because of new gen products and how much change in emission and how much volume.
Vasudev, you know very well we don't give the breakup of these, but as you rightly said, we have a combination, and it's a product mix situation. It's a change to the BS4, and it's the package of what we have sold. And in diesel, there's a wide variety, right from pass cars to three-wheelers to LCV to HCV. So, and tractors, of course. So, we don't give this breakup, but overall, I can also say there's been a very solid demand in this quarter.
So, but indicatively, it will be helpful if you can. So, basic thing which I was trying to understand is how much volume growth you did beyond industry.
Yeah,
so basically gaining share.
We have grown. So I can only tell you that we have grown more than the market has grown, number one. But the entire 34% has not come through growth. That also you can understand. It's also due to product mix. But we don't split up these numbers, Vasudev. I've got your question.
Yeah. And second question, sir, like your aftermarket business, last couple of quarters got impacted by GST, but on the overall basis, the size has been scaling up. So what new major products you are planning to add in that, and any vision that in next 3 to 4 years, where do you see that as a percentage of India of business?
It's a good question, Vasudev. Aftermarket, which is still quite a major player in India, and aftermarket has a very solid role in Bosch Ltd. So we see that 2-3 things we are doing. First, we are strengthening the base of the market by doing some fundamental issues with our customers and dealers, which ensure that the Bosch brand is protected and there is not push sales but pull sales. We are focusing on various areas, whether you say diesel, whether it's filters, whether you say the many Bosch branded traded products, whether you talk about our Bosch car service or Bosch diesel service areas. So we are focusing systematically on improving the market practices, especially after the market went through a turmoil, especially the trader community after the GST. So we feel that over the quarters in 2018, you will see a positive story unfolding in aftermarket because of the work being done in that area.
Though e-way bill is yet to get implemented fully, still any signs of improvement in branded product demand like Bosch in aftermarket post GST?
Vasudev, look, if you take GST or if you take e-way bill, and when you say e-way bill, let's be honest, it's just a few days old, okay? So we can't say it will take time. For any new initiative, we know in India, it takes time. So India has gone through 2 tough situations, which are, one is very good for the long run, the other hopefully good. One is demonetization and the second is GST. It has had implications on the industry and the demand. E-way bill is a subset, and we have to see how the community takes it and actually lives it. It's too early days to comment right now on the e-way bill. It's just a few days old now.
Sure, sir. Okay, thanks.
Thank you, Vasudev.
Thank you. The next question is on the line of Ajit Motwani from Bharti AXA Life Insurance. Please go ahead.
Yeah, good afternoon, sir. So your press release mentions that the revenue growth is 14%. Is it also adjusted for some, car multimedia business that we had discontinued, or this is the reported number, sir, on the revenue side?
Car multimedia, as you rightly said, had been taken out of Bosch Limited.
Yeah.
So this is without car multimedia. If you take car multimedia, this percentage will be even more.
Would you want to put a number to it? Would it be another 3-4%?
I can't put a number, but you can add another 5% to it.
Okay. Secondly, when you say there are one-offs in this other expenditure, which is 21.5% for the quarter, but for the 9 months, at about 1,500 odd crore, 17.5% of it, would you say there is no one-off there?
Very good point. Again, yeah. So if you take for the 9 months period ended December 2017, other expenses have increased by only 1.7%.
Yeah.
So you should look at that instead of this quarter. Both when it's, I call it, don't be euphoric, not be depressed. So look at the trend. So if you look at the trend, this 1.7% has to be looked at in terms of our growth. So we are overall controlling our costs in relation to our growth, and a better look is to look at the 9 months rather than the quarter on quarter.
Okay, so the royalty has just a timing issue in the sense that the sales would have come earlier and the amount is coming now. But for the 9 months, it is normalized, right?
In the 9 months, it gives you a much better picture, yes.
Okay. And in this, you also alluded to some one-time maintenance charges. How much would that have contributed?
We don't give the breakup for such matters. Don't get me wrong. Yeah, you will always have one-time, either plus or minus. And this is where I request all financial analysts to please look at trends in what we are doing and the root cause and enablers that we are tackling rather than the individual analysis of the quarter-to-quarter numbers where it's not giving us a right picture.
And last question on the capex side, how much is the plan this year and how much has already been spent in the next year plan?
Okay. On capex, if you look at what we are spending, we are looking at 2017, we are looking at about 450 crores. And the previous 4 years, if I take the average, it's anywhere between 425 crores up to 700 crores. Now, this is the type of spends that we'll also spend for the next 2 years. And that's what I mentioned right at the starting. That between anywhere between 500 and 700 crores is what we'll be spending.
Got it, sir. Thanks a lot, sir.
Thank you. The next question is from the line of Bhaskar Bukrediwala from ASK Investments. Please go ahead.
Thanks for taking my question. Just a question from my side on in terms of the BS6 thing that the industry will transition to. So just wanted to understand how well prepared we are, and also a sense on how would the content per vehicle increase under BS6, if you could give us a sense. I'm not looking at exact number, but a broad sense.
So BS6, what I do is now hand over to my colleague, Mr. Jan Oliver Roll, who is also the CTO and the board member. But we don't give the content, but I think he'll take us through a little bit on our preparation for BS6.
As you know, this is Jan Roll now on the line. As you know, BS6 will become new reality for all diesel and gasoline engines with 1st of April 2020, which means the industry has to be prepared with a line filled up by latest 1st of January 2020. So for us, it was a prerequisite to advise our customers in the course of this year and to start joint projects as early as possible, as in this time frame, considering the complexity of this new technology, this is somewhat a challenge for the industry, of course. And the industry is now here comprising, starting with the oil industry to provide the right fuel, from our side to provide the right technology for fuel injection equipment and after treatment system, and of course the changes in the engines to be entailed by our customers. So here we had a very good start in 2017. So we are well lined up with our customers, with the main projects being diligently chosen jointly here to be ready-made when 1st of January 2020 is then happening. How did we do this? We had here from our side a very intense exchange program with our technology colleagues all across the world. We call this an international development network. That is exactly the collaboration that my colleague Sumitro Bhattacharya mentioned, which is going across all entities and is not making hold at some kind of a country frontier. So we are very well prepared, and the teams on both sides, customer sides and our sides, are looking forward to bring these projects into the target line. You know well that engineers, they all like to work on new stuff, and BS6 is challenging new stuff for both diesel and a little less for gasoline engines.
Okay, sure. And also just wanted to understand, once this BS6 thing takes off, like you said on April 1, 2020, even the two-wheelers will have to transition to the injection technology, and no longer they will operate under the carburetors that they used to. Is that understanding correct?
That is fully correct understanding. As you rightly mentioned, BS6 is also holding true for the two-wheelers. And with that, we see that the carburetor will come to an end also for the two-wheelers.
Mm-hmm. And just correct me if I'm wrong, in the developed markets, they're already on a higher pollution norms. The two-wheelers that operates are already under the injection technology and no longer in the carburetor. That's correct, right?
Yeah, that is correct. But with India having BS6 in 1st of April 2020, also for the two-wheeler, they will be really on eye level here with, for example, the European market as well.
Okay. Sure. And would you be able to give